Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 31st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've talked about everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data today, a lot of it in the form of inflationary gauges, which is the CPI, which is Consumer Price Index. It's one of the best gauges for inflation out there. And we had French preliminary CPI come in at 0.3%, was expected 0.4%. European CPI overall was 0.2%, expected 0.3%. Italian PMI came in slightly higher than expected at 0.2% versus the 0.1%. And what else did we get? That's it for the CPI numbers. We also got retail sales. German retail sales came in pretty good at 1.7%. And then on to the United States, we had our ADP non-farm payroll change came in at 177,000. That's not the big one that comes out on Friday, which is the non-farm payroll number. That one's the real market mover. We also had pending home sales here in the United States at 1.3%, so a lot better than the expected 0.7%. And last month it was actually negative 0.8%, so much better than expected on that front. And then we also got crude oil inventories, and that was another build of 2.3 million barrels. Was expected only a build of 1.1 million barrels. One thing about that number was lately the API number, this is the Department of Energy's release. The API comes out usually the night before, and it's been way off lately. It was expected to have a build of less than 1 million barrel build, and they were way off on all their numbers. But the DOE, one other catalyst, not just only was that a build on the crude oil inventories, there was also a Cushing drawdown in, if you will, but it was a less of a drawdown than what was expected, and that has to do with the inventories that it's going on. And gasoline had a drawdown of almost 7,000 barrels, was expected a 1.2 million barrel drawdown. And then distillates actually had a build of 1.5 million barrel build, and the distillates is what goes into the manufacturing of like plastics and things of that nature. So with having that build of 1.5 million barrels versus the expected 275,000 barrels, that was a huge slap in the face really to a lot of people that were kind of getting bullish the economy. We're not seeing any inflation out there whatsoever. There's not a whole lot of demand for a lot of things. We also got Chicago PMI. I can't remember if I talked about the Chicago PMI came in lower than expected at 51.5, was expected 54. So that's the Purchasing Managers Index. That's the manufacturers that are purchasing the raw goods for implementing into the production process. That being down as well. Then we see this distillates number as a big build that caused a huge downturn in crude oil, which was actually trying to hold a little weight up after the API numbers. But as you can see, crude oil down $1.43 and blasted right through that point of control that I was talking about as it being a magnet earlier this morning on those first numbers. It went down straight down to 45.30 and has not stopped sliding since. Then we have gold, which is / GC actually trying to take back some of the gains, showing a lot of a doji here. It's had a few of them right in a row, so it's looking like it wants to stop its slide. Plus, it's right here on what is going to be a support area right within this area, 1300. Definitely a psychological number for support in gold futures, but it looks like I think it's going to hold 13. On to the bonds, also down, but just slightly down 4 ticks on the day. After yesterday and the last couple of days, it really looks like they're jockeying for position to see what the equities are going to do, and this value area high is acting as a support area for the bonds. And then on to NASDAQ sliding down, 20 some ticks today. It seems like a lot bigger move than what it really is. It feels like it in a sense, but NASDAQ down 20 ticks on the day. We also have the E-mini S&Ps down 14 on the day, and again, it seems like as we've been stuck in such a range, this 14-point move seems rather significant, although it's still really, could be considered to be still in this rangy area. And this is the breakdown of the E-mini S&Ps. This is why it seems like it's a bigger move than what it really is. NASDAQ really echoes this chart. This is the 15-minute chart on the E-mini S&Ps for the daily segment. This is when we basically opened up, started seeing some of that economic data, lack of any robustness in the overall markets, and then we saw the crude oil numbers right in here, and that gave it another leg to the downside. So E-mini S&Ps not really catching a breather on the selling aspect. Now, for a couple of things that I did, I talked about this yesterday in the daily market commentary, me trying to put on this Charles Schwab trade. It just has had such a major rally that it, with not having a whole lot going on, and if the markets start pulling back, Schwab is really going to take a hit for it. Plus, it was looking like it was getting a little overextended with that value area high. So I was able to put on a trade in there, and I did the October, and I bought the 32.29 put spread in there. So I bought the 32 puts, sold the 29 puts for a debit of $1. Now that's right in line with what I was talking about for this Friday's webinar on getting long put spreads. Right now is a great time as we are really overextended to the upside. There's a lot of opportunity to put on some contrarian plays, which is what I'm looking to do, and that's what I implemented with Schwab. And then ULTA, I'm kind of going on the flip side of this. They actually beat earnings, and I don't know what really is causing their slide, but they did beat earnings, and they have done nothing but slide since then, and it's well over a 10% move to the downside, and that's usually when I like to put on some contrarian plays in there. So I did the October, sold the 235 puts, I think I ended up doing the 230 puts in there because we're trading right around. It was 235 because I originally was looking at the 240 puts, but I did the 235, 230 put spread in there and collected $1.25 in that trade there. And then on to gold futures. Gold, I've had on a long put spread in there for quite some time and decided to cover it in line with what my rules are on Friday's webinar. You'll find out more about that. I don't have enough time to go into all of that, but I did the September 129, 126 put spread. So I bought the 129 puts, sold the 126 puts, and it is through my short puts. So that's usually when I look to try and cover that. I tried to cover it yesterday and started pulling off a little bit here and there as it was getting closer and closer to it, kind of running away from these last two trades yesterday, which actually ended up working out all right. And with that put spread, I originally paid $1.50 debit for it and got out for $2.31, and that is right in line with my profit potential for that. Plus, I like to cover those as soon as the market touches goes through my short strike on a put spread, for instance, that I paid a debit for. XLE, echoing what we're seeing in the crude oil today. Yesterday, XLE was kind of bucking the trend on the what crude was doing, continuing to sell off. As you can see, as crude oil has been selling off, XLE has just kind of been waiting in the wings to see if they're really going to take advantage of or if this was a real move, I should say, in the crude oil. And with XLE, which is the energy sector index ETF, and had a big move down today, as you can see, down over $1.25. So today I was actually able to get well better than my 50% of max profit. Yesterday it just wasn't coming to me, and I did the September originally, sold the 72 calls for 42 cents, was able to buy them back for a dime today, right up against that, the 50-day simple moving average right there. So that's all I've gotten done today. Still looking at a couple of other things. Friday's webinar is going to be, like I said, on long put spreads, and I'm going to go through all the rules and how to set that up for a higher probability of success. If you're just kind of picking your own strikes, maybe off of support and resistance levels, I'm going to teach you different ways in order to look at this to increase your profit potential in the future, all right, and also make you a more consistent trader. So go to protraderstrategies.com, sign up for that webinar. It's going to be a really good one. That's all I got for you today. If you can't, let's make this right. If I can't take that, take it easy.